Hey everybody, welcome back to Markets for Millennials and the weekly market wrap for the week of July 12th through the 16th. Don't forget to like and subscribe and share this with anyone whom you think would find it helpful. It's good to be back to kind of some regularly scheduled programming here. And what I'd like to do is I want to take a look at the indexes, and then I'll look at the dollar and the DXY and yields and gold and silver. I have a Bitcoin video that I've posted, and so I'm going to skip Bitcoin today. I will take a look at oil, WTI, and then I'm going to try looking at some different sectors for a moment today. But just kind of to take a step back and look at what's going on. I have this trend line that comes back to April. It was not really visible for a long time, but I have this coming back from April, I believe April 2nd of 2020, just after the March lows, and it's been kind of I have multiple different trend lines for various reasons, but it's been a pretty decent trend line for me, touching wicking below in October of 2020, almost touching it again in March of 2021, touching it again at the end of June. And as long as this holds, the bullish structure of the S&P 500 is still is intact. We're kind of, if it's what's really interesting is it's maybe you could say that this is kind of like turning into a wedge of some sort, because this trend line is not doesn't perfectly it's not perfectly symmetrical. The price action, the touches up here don't happen the same way. But maybe this is some kind of like wedge that's getting a little bit smaller and smaller. So it seems to me like the price action, as bullish as it is and as increasing as it is, it's pinning a little bit, and I'm not exactly sure why. Like I think the range is just generally getting smaller, but still marching upward. Still looks very bullish. The Nasdaq, from our last video, obviously had broken out and was making new all-time highs. You see here today, this kind of near-term momentum has broken after closing, has closed below today. And what's really interesting now is what's going to happen going forward, because some of the S&P rally, and I'll show you when we look at the sectors in just a little bit, but a lot of this rally has been mostly in the FANG names, your Apple, your Amazon. In fact, if I just wrong index. If I just go to the Nasdaq really quick, you just see the price action after Apple had been consolidating sideways and had been underperforming for the last few weeks. It's just shot up like a rocket. Microsoft has been on a tear for a long time, just kind of slowly grinding up. But the price action for the last few weeks, during the month of June and into July now, has just been insane to the upside. Amazon, look, we've kind of rolled off on Amazon this week. Google also just kind of grinding upwards. Facebook mostly grinding upwards. Tesla underperforming. It's kind of interesting. Has broken above and has been retesting this descending trend line. But I guess the point of all of that is that when you're looking at the Nasdaq, the price action is mostly in those names. They're so heavily weighted in the Nasdaq as well as in the S&P 500. But you'll see later there's a lot of the sectors that were outperforming for the last few months, since the start of 2021, and even going back to around the election. A lot of those sectors have been underperforming lately, while tech and mostly those few FANG names has really taken off. You can see here that the Dow has not made a new all-time high. It kind of touched up to it this week a couple of times, but hasn't made a new all-time high since the early part of May. And then you see here on the Russell, we've been in this sort of sideways consolidation. And if you look here, I have a support line here that is about to close below, as well as a long-term trend line. If you look here, going back to the March lows, we're closing below that. And so specifically on the Russell, it's a little concerning. I'm going to be looking to see if on price action next week, if we come up and retest it and resume down. If we do test and resume down, then that's a warning sign. I talked about in my last video last week that what I was looking at a lot of was the Japanese yen pairs, specifically against the commodity currencies, and what you can see is here is that we're still on a downtrend, even though we haven't broken this kind of critical support level right here on the New Zealand dollar, Japanese yen. The Australian dollar, Japanese yen looks much worse. We're actually closing below a pretty important level. Probably another level that I could put right about here. See if I can just mark that real quick. Whoa, I don't know what's going on here. So kind of make this bright green. That's another pretty critical support level. It was resistance. And then the Canadian dollar, Japanese yen, also making lower lows, lower highs, not quite at the critical support level. The Canadian dollar, Japanese yen has a ways to go before it breaks these important descending trend lines. But the point is that I was looking at those last week because I was thinking, it seems like the at least the currency pairs are signaling that something is coming, and I'm not really sure what it is. If you look here at the Dow, if I darkened up this this trend line right here and cloned it, see if I can do this really quick. I didn't do this earlier. If I clone it, right, it's not going to be exact. But you can kind of see that we broke below the trend line. Move it a little bit more. Broke below it, and we've been kind of toying with it in sort of what looks like an ascending wedge with my other trend line here. A break below here, that's another warning sign. And then what I was looking at on the Nasdaq, what's very interesting to me also is that if you just look at this price action, like a lot of the price action basically since September has been kind of just like kind of curvy, slow, even though you did have some pretty steep rises at times. What I'm seeing here on price action, this kind of move up, you can actually kind of see the steepness is actually increasing, or at least it was increasing up until here. Reminds me a lot of what was happening right here at the end of August and into early September, right? So you can kind of see that price was kind of meandering a little bit, kind of momentum slowing down, and then suddenly just a whoop, you can see the increase in the angle of that of the rise, and that led to a significant correction, right? So this correction, what was something like from high to low, about 15%. It's pretty decent. And then the same thing happened after this kind of little relief rally. Kind of had another 10% drawdown. That was when a lot of people were looking for a crash, right? Price action looked a little bit different here. This was a little bit different. It was still over 10% of a correction. But anyway, on the Nasdaq, this just because of the outperformance of those tech names, I'm a little concerned about this. I've been saying a lot of times in my weekly updates that I've been staying away from equities because of high valuations, but just also trying to find a good place for an entry has been difficult. And I'm not going to chase this, especially since it's now breaking down below. So that'll be something to look at. The yield situation is probably part of the reason why those tech names are being bid right now. So let me just show you here on the yields. I kind of have this bull flag because of price action, right? So I've got this large bull flag. I will say originally my trend line was something like right here, but we broke down, and then it actually does kind of work a little bit with these touches right here and right here. It's so maybe I can just show you if I clone this, kind of put it back and generally in the same place. On the 8-hour time frame, it looks a little bit better as far as the symmetry, market symmetry, right? Not perfect, but there you go. So anyway, so I was looking at this as kind of a big deal. what's really interesting is if you, again, I showed this on a video a long time ago, but if you just go on, we'll do a monthly chart, it's a little bit easier. I mean, steep downtrend, lots of symmetry in these with these blue trend lines. I mean, it's basically like a no-brainer that this was not going to break, at least not significantly, at least in my eyes, or that it would take something a lot more decisive. And the market seems to have cooled down a little to the yield picture. And what's really interesting on yields, ever since the beginning of August, when we saw a bottom in yields and started to see the rise, we've had this this ascending trend line, the most shallow ascending trend line that I've been able to do. And I had this in place basically since November. And you could see here that we actually closed below it on the 15th, and then today tried to wick up and failed to close above. We've confirmed closing below that trend line. And so right now, it kind of looks like there's a lot more weight that the market is giving to this kind of channel area. And it might not even be a channel, since I just established this kind of lower line just through symmetry of the market. So this will be interesting, because what I'm looking for here is to see, do we bounce off the low end of this range and then come back up? Or are we going to get this retest and a resumption from this trend line? So I'm thinking we could see that over the next week or two. So that will be what I'm looking for on yields. Along with increasing yields, the dollar has been bid. You can kind of see we're consolidating. My dollar chart is very, very messy. I'm sorry. We have bigger picture. We have a higher swing low here. And it looks like, some people are saying this is a bear flag because, we're in a long downtrend. But we've been mostly sideways for a long time. We're kind of around the same price level that, we first touched back in July, of 2020. So it's been mostly sideways, not perfectly, but mostly sideways. And it seems, if I were to say darken this, for all we know, we could end up in a consolidation even longer through the rest of the year. It's really hard to tell. The dollar really hasn't proven itself one way or another. So it'll be interesting to see, because of this. If I go to an 8-hour, you can see it really well here. Because of this consolidation that's happening underneath, and we're still kind of making higher lows here, it's entirely possible that we bust above this trend line, which has been talked about as a kind of reverse head and shoulders. Let me get back to my daily chart for a second. And if we do that, then who knows where we could go. I'll be looking to target somewhere in this range between 94.50 and 97. And we'll just kind of see. I don't want to get too ahead of myself here, because I want to see the dollar really establish itself. And it's also helpful to remember that the dollar is 50% weighted against the euro, right? So it's almost essentially an inverse of that, right? So you can kind of see that price action that I've got here. And the ECB can do whatever they want with the euro. They can print more. They can tighten. They can do whatever they want. And so it's not just about the purchasing power of the dollar. It's also about what it is compared to other currencies. And again, 50% against the euro is pretty significant. So that's something to watch also going forward. So I'm definitely highlighting yields. I'm highlighting the Russell. And I also want to look at the Nasdaq because I want to see what's going to happen there. Now, to take a quick look at gold, my gold chart is so messy. We've got some near-term momentum to the upside. It's given back almost everything that it gained this week. But you can see that this near-term momentum is still intact. I'm looking for gold to really prove itself above this sort of resistance level, preferably where I'm looking at, and I've been saying this, I want to see gold really establish itself above 1950. If we can get back above 1916, 1913 in that area, that would be also better, because what I'm looking for now is, will this establish a higher high? Can we get this move to come up here before coming down, right? So I've got multiple trend lines. I think I've showed them before, going back, some clone trend lines from, going back to 2015. You can kind of see that there. We are above this channel, my downward channel trend line. So we're kind of back up above in a good spot, but again, it's still not exactly where I would like to see it to get involved. And then the same thing on silver. In fact, silver, it looks like we're going to close below this level here. So I'm going to turn this red. That's not good for silver. And again, it's one of those things where is the Japanese yen telling us something is coming, right? Is the Japanese yen telling us that? Because again, commodity currencies, you're seeing commodity currencies against the Japanese yen come down. Definitely the Australian dollar and the New Zealand dollar are the big ones that I was looking at, right? So that's a pretty big deal. And then you've got the Nasdaq, which is just rolled upwards, just it's almost unsustainable there. But you don't have the Russell confirming that, right? And so to me, the markets are a little uneasy. So the question is, because normally in a in a precious metals bull market, you're going to see silver outperform, and it's not really a comparison here. Silver is sideways in this consolidation zone, whereas gold has been mostly down, right? So it's not really the best comparison, the best thing to think about, but it is concerning to me that you're seeing silver kind of losing more of these trend lines, more of this momentum than gold is, at least as of late, right? Because if you go back to gold, look at the last few days on gold. We've been increasing in price. That's why that momentum trend line is up that way, whereas silver has virtually been sideways. It's given up basically. It's below where it was a few weeks ago in the middle of June. So I'm wondering what the market's trying to tell us. It's kind of tedious. And then what I'd like to also do really quick, I'm not, basically the long story short of it is I'm not buying silver or gold right now. That's just me. A couple of things that I flagged because I thought it would be good to look at the sectors. First of all, actually, let's look at the SPYV, which is the value ETF, the S&P 500 value stocks. So you can kind of see we're kind of in this consolidation zone, but we are making a lower high. And so what I'll be looking for is will we continue to make lower highs, and then will we make a lower low, or will this kind of, it's not great support, it's local support, will this support line hold? Whereas you see growth, and again, this is probably the best place to see that kind of, the rate of the rise increasing, right? So here's the S&P growth ETF. And if we go back where I showed you on the Nasdaq, where we had that, you saw the increase in the slope. You see that there before the correction. And then you're also seeing it here. You can see if you pay close attention, it was becoming more steep, and now that's kind of coming down. And so I suspect that we're getting a correction. I know that there are others. I'm not claiming to be the first to be looking for that, and I'm not a perma bear, so I'm not always looking for corrections. But to me, what's been happening with the rise in growth stocks, with what's happening on the Nasdaq, but we're not confirming in every other index, and with the Japanese yen getting stronger, and with gold right now outperforming silver, I'm wondering if we're moving towards some risk off. Let's take a look at some others. So we have utilities that it seems like it's closing above this trend line. It had been consolidating. Consumer staples still consolidating sideways, but protecting its upward momentum. The industrials and materials, and I think the financials were the ones that I was really, and energy were the ones that I was really looking at, because those are making lower highs. You can see here in the energy sector, those are making lower highs and lower lows. We've made I think we actually made a higher high here in financials. But definitely in materials, we're making lower highs and lower lows, and in industrials. And the reason why this is a big deal is because ever since we got to the, what is this? This was in November, right around the time of the election. We had a massive increase, then sideways price action, and then they have been outperforming. Those are the they're more of the cyclicals that were outperforming, and they're not participating in the rally, in these rallies that are happening now. And so that's something that I think is interesting. Whereas, if where's my technology? I think it's XLK. Look at technology once again. It's basically the Nasdaq, right? Basically SPY growth. You're seeing the exact same thing. So that makes me, it gives me caution. It definitely is giving me caution on the markets right now. So my position is on the sidelines. And so hopefully this was a good look at the market for you. Again, if you thought this was helpful, go ahead and like and subscribe and share. And I'll see you guys next time.